What is going on, everybody? Welcome back to Trading Learning 101. Today's video, we're going to talk about how I use Fibonacci in my everyday trading, how I view the market using Fibonacci. Fibonacci is a huge part of my day trading. We're going to break down in this video how I use it, what it is, the many tools that you can use, and some tips and tricks about Fibonacci. Let's jump into the video, everybody. Believe it or not, and I've run into many people that don't know the power of Fibonacci. Fibonacci is around us in everyday life, from the measurements of our face, our body, our hands, to Mother Nature, space, famous paintings. Architects use Fibonacci numbers, and famous structures like the Eiffel Tower have the Fibonacci sequence in it. I have a picture here with just some examples of the Fibonacci sequence. For an example, waves. The golden ratio in a wave, the measurements of our face, the galaxy, the famous painting here, our human body, and then the Fibonacci sequence. I've already made one video explaining what Fibonacci is and given many examples of Fibonacci. I will leave a link to that video in this video description down below. This will be my second video now on Fibonacci. I've been a student of the stock market and learning to day trade going on for 5 years now, and I can honestly say at one point I was a noob. I didn't know what I was doing, and it's pretty crazy how along the journey, everything that you learn, you take pieces of it and you start to develop your own strategy. Over time, I've come to realize that for me, Fibonacci is my style of trading and viewing the market. This is a picture of 2 books that I've read related to Fibonacci. The first one that I've ever read was the Fibonacci Analysis by Constance Brown. This one right here on the right. The second book that I've read is Fibonacci Trading by the Fibonacci Queen, Carolyn Borden. And here is a picture of the Fibonacci Queen herself, Carolyn Borden. This is a great place to start if you're interested in learning about Fibonacci trading. She has the best content out there when it comes to Fibonacci, so I highly recommend learning from her. There's many people out there with Fibonacci videos. People who say this is the correct way to use Fibonacci, and there's people that really don't know what they're doing and teaching bad practices with Fibonacci, and they probably don't even know the backstory of Fibonacci. Carolyn Borden has been a student of the stock market and has been studying Fibonacci for well over 25 years, even 30 years, I believe. She's been trading and a student since the 1980s, if I can remember correctly. I can honestly say when it comes to Fibonacci, definitely have to have a passion for it if you want to use it. And is Fibonacci going to be right all the time? No, nothing's right and correct 100% of the time. It's how you view it and use it as a tool to help you put the pieces together. Because you got to remember, you got to look at yourself as a detective wanting to solve the case, getting all the evidence together, analyzing it all, and putting it together for the story to make sense. And you also got to look at yourself as a scientist. You're always testing, refining your process, and testing again. It's a never-ending cycle. And once you get into a consistency of learning, putting the story together, that's when you can start revolving trading styles around your personality and your lifestyle. Alright, enough with the jibber jatter. I'm going to jump in and show you guys how I use Fibonacci in my trading and how I trade with Fibonacci. The platform that I'm going to use for this video is Street Smart Edge by Charles Schwab. I've made many tutorial videos on this trading platform. I will leave that playlist down in the video description below if you're interested in checking out this trading platform. And if you're new to the channel, hit that subscribe button, join the Trading Learning 101 community where we all grow as traders. And if you like this video, hit that like button. I help you out, help me out. So the first thing we're going to go over is Fibonacci retracements. There's a couple ways you can use Fibonacci retracements. How you're supposed to use Fibonacci retracements is you're supposed to measure from a valley low to a valley high. If I zoom out here, we could see we have a low down here at the previous day. If we click on our Fibonacci tool, the Fibonacci retracement, we go from the low right here and we could swing up to either that high right there, or we can come all the way to the next day and plot it at that high right there. And then when the stock starts to pull back, that's when you start looking at the key retracement numbers. All platforms are different, trading platforms that is, and they can be different in the way that you can plot them out, the colors, and the retracements that you want to focus on. Now, going back to this picture right here, Fibonacci sequence. What is the Fibonacci sequence? It's a series of numbers by combining the previous two numbers to get that number. So if we start at the beginning, 1 and 1 or 0 and 1 is 1. 1 and 1 is 2. 1 and 2 is 3. 2 and 3 is 5. 3 and 5 is 8. 5 and 8 is 13, and you just go on and on and on and on and on into infinity. That's how the Fibonacci sequence works. And the most popular numbers for the Fibonacci sequence is 23.6, 38.2, 50%. Even though 50% isn't an actual Fibonacci number, when it comes to retracements, a lot of people use 50%, pulling back 50%, so they just add it into the sequence when it comes to trading. The golden ratio, 61.8, 76.4, and 100%. And you can keep going on and on from that. So going back to Fibonacci retracements, you can go from valley lows up to swing highs. Like I said, there's a few ways you can use Fibonacci retracements. And what I like to do, if a stock's gapping up pre-market before the trading day even begins, this blue dotted line right here is the previous day's close. So if a stock is gapping up, what I'll do is I'll go to my retracement, I'll measure from the previous day's close up to pre-market high. That way when the market opens, if we get a sell-off, I'll see if the stock sells off, has a morning panic or a morning dip, and will bounce at a key retracement level. But if the market opens and the stock starts spiking like it did right here, I'll take the fib, I'll let the stock spike, do what it's got to do. I won't chase after it. I'll simply let it top out, and then I'll let it start to retrace. Then I'll start analyzing it and looking for a possible entry on the stock. Having time, waiting, having patience. That's what I like to do. Now that we got this big run up to almost 1350, I'll measure it from the previous day's close up to the high right here at 1350. Now if I zoom in on this, you can see it tried bouncing here at 23.6 and failed. And look, it surged right through that Fibonacci retracement there. It looked like that 38.2 was gonna hold, which it did from $12 up to $12.50. That could have been a good little scalp play there. But then when it came back down right here, it fell through it down to the 50% level up to the VWAP. And look at right where it bounced, right here. If we look at the retracement, is the golden ratio, 61.8. It bounced right there and reversed from going in a downtrend to an uptrend from $11.25 all the way up to a high of almost $14. This all right here, reversing and trending up from that 61.8 level. So you see how powerful Fibonacci retracements can be just by plotting out from different areas. Now we're going to go on to Fibonacci Fans. We're going to go back to Fibonacci retracements later on in the video, but I want to jump into Fibonacci Fans to knock this one out. I like to use Fibonacci Fans when a stock is in a downtrend to try to spot a reversal. So I can use my Fibonacci retracements, let it go through the levels and see which level is holding for strength and maybe look for a trade. The more tools that I have and that I like to use, the better. And the more that these tools like the Fibonacci retracement and the Fibonacci Fans, if both of those correlate and show very strong strength, the better. That's the way I view it. And with Fibonacci, you have to look at Fibonacci as if it's a tool. It's not perfect and it's not going to work all the time. So let me pull up my Fibonacci fan here. And how you measure with Fibonacci Fans is when a stock is in a downtrend or in an uptrend. For a downtrend, you just simply connect the lower highs on the stock. You can measure it from the top, connecting the lower highs. Now, some of you might say this is not perfect. You have all of these down here where it's not connecting. I try to stick to the trend and I do what's best for me. Now, if we look at the Fibonacci Fans, after I plotted this, I connect all of the lower highs. And what I simply do is I wait for the stock to cross over the first Fibonacci fan line here, which is the 23.6 level right here, and I look for it to hold that level. And once it holds that level, I want to see it start working up to the next Fibonacci level, which is the 38.2, and hold that level for support. Once I start to see that, then I can start to say to myself, all right, this stock is reversing and now it's starting to trend up. And look what happened. The stock came up through that 23.6, held it up in here, crossed over the 38.2, and came up into the 50% retracement level right here, consolidated, holding at that 50% retracement level on the fans, and then worked its way up through the 50%, up through the 61.8, and topped out right here at 1225. Then it retraced back down to the 61.8 level here. Couldn't hold it. Came right down, and look it. Bounces right at the 50% retracement, and we also have the VWAP right there. So I got two strong tools right there merging together, and it's holding, and then from that level starts trending its way back up. Made its way up to the 76.4 retracement line, crosses just over it, couldn't hold it a little bit, and then came right back up above it, came back down, and it held it right there. And then from there, went all the way up to a new high of the day. It's all about how you look at it and use the tools. So if I was in a downtrend with the Fibonacci Fans, what I would simply do, if I was a short trader, I just moved to a different area of the chart to show you how Fib Fans would work if you're looking to short a stock. If you're looking to short a stock or wait for a stock, fail to follow through with an uptrend, and you're waiting for it to reverse and start possibly trending down, all you would simply do is just connect all of the higher lows on the uptrend and wait for it to start either consolidating or trending down, working its way through the Fibonacci retracement levels. See here, and here's an example of the Fibonacci Fans actually working on a downtrend if you're a short. So we got the stock here at 815, shoots up to 932, falls down to 850, and then grinds its way all the way up to 920. From pre-market low here, just simply get your Fib Fans out, connect all the higher lows, and then look, it falls through it right there, consolidates all right there, and then surges down and gets really tight between this 23.6 and 38.2 level. And then once it falls out, it just tanks all the way down right here. And look, it right there is the 61.8 level, the golden ratio. It had a death candle from $8.90 all the way down to $8.50. Little quick fast consolidation, and then it just tanked again even harder right there down to the 76.4 level. Quickly had a little bounce up and got rejected right at that golden ratio, 61.8. Came back down, and then right there at the 76.4 level, surged all the way down near this pre-market low right here. Popped up, surged all the way back down. So that's how you could use the Fib Fans if you're looking for a reversal to the downside. There's multiple different ways you can use Fibonacci Retracements, Fibonacci Fans. This is why I love them so much. And you can apply these to multiple different time frames. 1 minute charts, 2 minute, 3 minute, 5 minute, 10 minute, 15 minute, 30 minute, 60 minute, 65 minute, daily charts, weekly charts. And the bigger the time frame, the bigger the move, and the bigger that area could hold, the more powerful it is what I'm trying to say. Alright, moving on. Now, this is a 10-minute chart of ticker symbol INO. These volume bars right here, don't worry about those. What that is just volume profile. The next part of Fibonacci we're going to go over is Fibonacci Clusters. Now, with Fibonacci Clusters, this is really, as it says in the name, it's really going to cluster up your chart. The object of Fibonacci Clusters is to measure moves, and you want at least 3 points of interest with the Fibonacci clusters. So what you want to do, either with projections or retracements. For this, I'm going to use retracements. You want to go from multiple swing lows up to the swing high. Up here, we got our first one measured from down here. We're going to do another Fibonacci retracement from another swing low up to the swing high. And then you're going to do another Fibonacci retracement from a swing low up to the swing high. And then you're just going to repeat the process going up the chart from swing lows up to swing highs. And what you want to look for, areas of interest. Areas of interest of at least 3 lines at a price level. We see right here, we got 2. You could look at that area because it's got 2 Fibonacci retracement clusters at that level, but the more, the stronger. So the perfect area, I'm going to say, is this area right there. You could see we have 2 Fibonacci lines right there, and we got 1 right there. And the stock bounced off that $11 area and ran all the way up to $16. So when this stock starts to retrace, you have 3 cluster lines right here at around $11. And then what you would want to do is, once you find your levels of importance, delete all of these lines, all of them, and then put 1 line right there at that $11 area and leave a note with that line. Just write something as cluster support, cluster resistance. And the reason you want to do the Fibonacci retracement clusters, from my perspective, is you have so many people using Fibonacci and measuring from different areas on the chart. You want to try to pinpoint from as many measurement levels to get a big area of interest from multiple point of views, if that makes sense. So you might have one person measuring from down there up here. You might have another person measuring from right here to the high. You could have another person measuring from this all the way up. You could have another person measuring from this all the way up. Even from right here all the way up. So you see all of those possibilities of people who do Fibonacci retracements. They could be measuring from many different areas on the chart. The object of the Fibonacci clusters is to measure from as many swing lows to swing highs, determine which areas have at least 3 lines or more at a specific price area. That should be the strongest area to keep an eye on for support or resistance. Now, with Fibonacci clusters, we did it to the upside. When you do it to the downside, what you would want to do is measure from the highest point on a chart, and you want to measure from all the swing lows. From the highest point of a chart to the right, you want to start from the high, work your way down to the low. From your high, work your way down to the next lowest low. From the high, work your way down to the next lowest low. And then repeat the process just like you would measuring it on the upside. You can also get into Fibonacci time retracements, but I'm not really going to get too much into detail with that in this video because honestly, I don't use Fibonacci time sequences that much. The object of this video is to show you guys what I use and how I use Fibonacci in my everyday trading and analyzing the market. And you're going to notice Fibonacci retracements, Fibonacci tools in general are going to work very, very well with indexes and ETFs. The next Fibonacci tool I want to go over are Fibonacci moving averages. Now, I only use 2 Fibonacci moving averages, and the 2 Fibonacci moving averages that I use is the 34 EMA and the 8 EMA. I have the 34 EMA, this greenish blue color, and then I have the 8 EMA, a dark blue color. Now you want to plot these 2 moving averages on a bigger time frame. I'm a day trader, so really the biggest time frame that I'm going to use on intraday is the 10 or 15 minute chart. If you're a swing trader, you're going to want to be looking at a 15, 30 minute hourly chart. When plotting these 2 Fibonacci exponential moving averages, they work very, very well. And what you want to look for, the 8 EMA to be above the 34 EMA. When the stock is holding above the 34 EMA with the 8 EMA, it's showing bullish strength. And also, if the 8 EMA is just below the 34 EMA and crosses above 34 EMA, you'll get a shot up like right here. Kind of like right here in this area. Teal blue, let me make these a little bit thicker for you guys. Hopefully you guys can see that. So this dark blue line is the 8 EMA. The teal greenish blue looking line is the 34 EMA. You could see the 8 EMA is currently below the 34 EMA. The 8 EMA creeps up, they start to come together, getting tighter and tighter and tighter, and then right here, this area, the 8 EMA crosses over the 34 EMA, and look at this, we get this big spike up to 4, and it gaps up all the way up to $5. And then if we scroll over, stocks gaps up, moves up, retraces, and then right here in this area, the 8 EMA bounces right off the 34 EMA, and the stock continues higher. Then once the 8 EMA crosses below the 34 EMA, that confirms the downtrend, and you could really see sharp drops in the stock. You can experiment like what I do and plot the 34 and the 8 EMA on lower time frames, like the 3 minute and the 5 minute. See how the stock reacts. Like for an example, for this one, I just have the 34 EMA plotted on the 3 minute. Stock had this big up move. Alright, let me get this out of the way before I confuse you all. This yellow line is the VWAP, volume weighted average price. This bluish green line right here, that's the 34 EMA. You can see the stock trended down below the VWAP and it bounced and held right here at the 34 EMA. Then the stock comes back up, reclaims VWAP right here, reclaims it and holds right there, and we have the 34 EMA getting closer up to the VWAP. Crosses over VWAP, stock starts trending up from $12 up to $14.25. This is why I use the 34 EMA on my 3-minute chart. I want to see what's going on, what's the trend. It's Fibonacci. I love Fibonacci. I have a passion for this. I'm always experimenting with Fibonacci numbers, Fibonacci tools, retracements, projections, arcs. I love the Fibonacci world. This is why I revolved my trading around Fibonacci, because it doesn't work all the time. Like I've said, when it works, you can really see the stars align in the sky. Take advantage of that. And that's what trading and day trading, swing trading, long-term investing is all about, and technical analysis. Developing a strategy based around your personality and your lifestyle, and when it all starts to come together over time and all of that studying that you've done and on your journey, stuff just starts to make sense. And when you have a passion for this, it really makes you reflect and look back and be like, wow, I've come a long way. Everything's starting to make sense and I'm starting to see things clearly from my point of view. That's why they say don't pay attention or listen to what other people are saying about the stock market. All I see on YouTube is stock market crash is about to happen, recession, will the stock market keep dropping, will this happen, will that happen. Ignore all of that. Just take it day by day, week by week, month by month. Don't worry about what other people are saying. There's many people out there who just like to freak people out, like people on CNBC. All they talk about on that show is drama, and what they want to do is freak people out to jump off the roller coaster. You know, historically the stock market has always gone up. Always. Out of the whole history of the stock market, which is over 100 years, how many crashes had we had? What, 3, 4, or 5 of them? It still continues to go higher and higher and higher. Statistically, the stock market's going to keep going higher. It's just a matter of how long are you going to be in that downtrend and how long will it take to get back up. So that's why they say the older you get, and you don't have much time, start to reduce your risk. When you're young, be risky is what they say, because you have a lot of time for the stock market to keep making new highs. You know, if you have 5 years left of retirement and you just hit a bear market, the markets can go down and be in a recession for 2-3 years. And then you got another 2-3 years for the stock market to keep making its way on up to the highs. And then another couple years for it to break out and keep going higher. Learn, study, do your own research. And over time, trust me, things will start to make sense and you could put it all together. For me, that's my story with Fibonacci. I've learned about it. I've studied all of the ins and outs on it. I've watched videos. I've realized who knows what they're talking about and who doesn't know what they're talking about. And honestly, over time and the journey, you start to just develop your own style and strategy, and you don't even pay attention to what other people are saying. Again, when it comes to Fibonacci and you want to learn about it, learn from Carolyn Borden. Follow her on YouTube and Twitter. She posts a lot on Twitter. She's the Fibonacci Queen. She knows what she's talking about. I've learned a lot from her. Like I've said, I've read her book. She has her own YouTube channel, which I will leave a link in the video description, and she's also on the YouTube channel Simpler Trading. Subscribe to Simpler Trading, go to the playlist, and then from the playlist she has her own playlist, Fibonacci Queen free daily market videos. So every single day she puts out a market recap and a market video going over pretty much the main indexes, what she's trading. She's more of a swing trader and she's looking at bigger time frames. From watching her videos, you get to see her process, how she views the market and doing technical analysis with Fibonacci. And of course, I gotta do a plug for Trading Learning 101. I want to thank you, all of my subscribers. We are currently at 1,640 subscribers. We are growing every single day. I'm thankful for you all. Thank you for being a part of this community. Let's keep it going. This is only the beginning, and if you haven't already, hit that subscribe button. Join the Trading Learning community where we all grow as traders and investors. I have a passion for the stock market and I love what I do. I love trading. I love doing technical analysis. I love making these fun videos for you all to learn from. And I know trading can be boring and studying can be boring. So this is why I try to make fun videos for you all and make learning fun. That's what I want to try to do with this channel. Don't be shy. Leave comments down below. I answer to all my comments. I want you all to interact with this channel and ask questions and grow every day. And again, don't forget to check out my first video on Fibonacci. I will leave a link to that video in the video description, going over what Fibonacci is, a little bit behind the story. It's a little fun video explaining and showing all the cool things with Fibonacci. You know, Fibonacci is fun and very interesting. I absolutely love Fibonacci, and not a lot of people know about Fibonacci, and it's surrounded by us in everyday life. It's a very useful tool to learn and use in the stock market. I'm glad I discovered it and learned about it, and it's taken my trading to another level over time. I hope you all enjoyed this video and are having an awesome day. Hit that subscribe button, join the Trading Learning 101 community, and until next time everybody, have that patience, have that discipline, and study, study, study. Later everybody.
The most valuable commodity I know of is information. Wouldn't you agree?